When thinking about anti-money laundering, it's assumed that every sector needs to comply with the rules and regulations. But is that always the case? Some sectors, in fact, are more exposed to money laundering. So it got me thinking, what sectors does AML laws apply to? In today's video, we will be taking a look at what sectors need to comply with AML laws, which ones are more exposed to money laundering, and what happens if legal entities don't comply. Hello, and welcome to another KYC Lookup video where we bring you AML related content to help you enhance your knowledge in the fight against money laundering. Before diving into today's video, be sure to subscribe so you don't miss out on any future videos. Oh, and don't forget to leave us a comment with any suggested topics you would like us to cover in the future. We also have a special announcement to make, so be sure to watch until the end to find out what it is. So, on to today's video. What are AML laws? AML laws are regulations that industries need to follow, implemented by each individual country. These regulations are set on the back of standards set by the Financial Action Task Force, FATF. These laws are imperative to follow as companies, whether big or small, do not get pulled into facilitating money laundering. Who needs to comply with AML laws? As would be expected, all high-risk sectors, for example, financial services, need to comply with AML laws. However, as criminals adapt to increased restrictions and exploit vulnerabilities in different sectors and emerging technology, the scope of these laws have expanded to the following sectors: financial and credit businesses, independent legal professionals, accountants, tax advisors, auditors and insolvency practitioners, trust and company service providers, estate or realtor agency businesses, letting agency businesses, and casinos. What are these sectors doing to comply with the AML laws? As you can see, there are many sectors who need to adhere to the AML laws and regulations. At a minimum, industries must appropriately assess the money laundering and terrorism financing risk they face, including the likelihood and impact of those risks, and to identify and respond to changes in risk over time. Include in AML CFT programs appropriate risk-based systems and controls to mitigate and manage the money laundering and terrorist financing risk to which they are exposed. Establish an appropriate framework for board and senior management oversight of the AML CFT programs. Implement simplified and enhanced due diligence measure to carry out identification and verification of clients before onboarding and perform additional scrutiny on high-risk customers, including politically exposed persons, or PEPs. Implement a client monitoring process to monitor the intent of the relationship between client and business and their activities to identify potential suspicious acts. Conduct ongoing client due diligence, especially of high-risk clients, to ensure that they continue to be fair clients and are not involved in money laundering or terrorist financing activities. Keep a record. Regardless of the size of your practice or the amount of regulated work you do, you need to make sure your practice-wide AML risk assessment is written down. It's important to be self-critical when you do your risk assessment. Regulators can ask to see your risk assessment, especially if something goes wrong with compliance at your practice. You should also keep a record of the sources you use to complete your AML risk assessment. And keep internal policies and procedures current, up to date, and easily accessible. By implementing these regulations, sectors have begun to grow a culture of good practice and in turn, spotting suspicious transactions will become more clear for compliance professionals as legal entities update their policies and procedures. What happens if sectors don't comply? All sectors, whether bound to AML laws or one loosely applicable, should in theory conduct their business following the clear anti-money laundering guidelines. Unfortunately, non-compliance with the AML regulations may result in financial penalties or imprisonment, depending on the nature and severity of the offence. If the local regulator finds any wrongdoing, then it has the authority to wind up or restrict the operation of sectors that are found guilty, and may also recover funds and assets that are involved in money laundering offences via court or civil proceedings. Financial penalties can have an effect on a sector, but another thing that can be even more damaging is reputational damage. If you become known as a sector who knowingly allowed money laundering proceeds to flow through your business, then more often than not, clients or new customers will no longer want to continue or take up business with you. Sometimes reputational damage can be more severe than any other punishments. What sectors are more exposed to money laundering? Cash-intensive businesses are more susceptible to money laundering, as they deal primarily in cash from their customers. While most cash-intensive businesses are conducting legitimate business, they may have no or limited policies and procedures that define internal control systems to ensure the regulatory compliances. Here is a list of sectors that are more vulnerable to money laundering and are primarily cash-based. Casinos, trucking, restaurants, shops or grocery stores, contractors, car washes, retail shops, auction houses, motor vehicle retailers, and jewellery stores, for example. These businesses may develop well-defined processes to prevent the risk of money laundering and terrorist financing. But due to weak compliance culture and regulatory environment within the business or company, some aspects of these businesses may be susceptible to money laundering or terrorist financing. What responsibilities do those sectors have? Just like having a chameleon effect, criminals are able to adapt and disguise themselves to avoid detection. Therefore, it is so important for every sector to have some level of AML training to help its employees and teams to have awareness of what the regulations say and what to do if they suspect their services are being exploited by money launderers and criminals. It is all of our responsibility to work together to combat this ever-growing and evolving issue, so that it doesn't have a continued knock-on effect on our society and economy. Well, there you have it. What sectors need to comply with AML laws? Which ones are more exposed to money laundering? And what happens if legal entities don't comply? Please tell us in the comments section what other sectors should adopt a more robust AML regulation, and any other topics you would like us to cover in the future. Now for the special announcement mentioned at the start of the video. We have now launched our very own courses for you to take a more in-depth look at a variety of subjects, such as Introduction to AML, Beneficial Ownership, and Customer Risk Rating, for example. So make sure you visit our website for further details, and let us help you connect the dots in KYC. Thank you for watching the video, and if you made it this far, don't forget to like and subscribe to watch more amazing videos.